Okay, so top down, you can see that um, in the longer term, that I know that price is going up here since the U.S. since the national country's dollar is not like a cryptocurrency. We know that it's not going to go to zero, or it's a pair, so which means it's stable. It's going to go either way. If the euro goes to zero, then this will keep going down. But it's very unlikely that the euro, the U.S. dollar, will keep going to zero. And if you're trading instead of just investing, buying and holding, if you're buying and selling, then you shouldn't have a problem with this. That's why we do strategy for buying either way. Either you're buying U.S. dollar or you're buying euro. So if you learn how to, either way, you are still buying. If you're buying euro, then you're selling U.S. dollar, and if you're buying U.S. dollar, then you're selling euro, right? You have to exchange either one for either. So either way, you're trading, and that's why you should use pairs like this, right? And these are very strong pairs, so it's a very good market. Um, Very good. So anyway, the price is currently 3,000 pips off of the average, which means that it's oversold. The U.S. dollar is oversold by 3,000 pips. So at least you could hold this and wait until it hits the average. I think that would be called dollar cost averaging, but in this sense, it would be called euro dollar cost averaging. But you might be waiting many years for that, 5 years or something for it to hit this. So anyway, the next closer average is this one, which is 1.6 thousand pips away. So we know that there is if you're going to do some dollar cost averaging, you should do the euro cost averaging and target either here or here as a shorter term, or this as a longer term. I can still see that the market favors the dollar. And if we zoom in more, we can see that we've got these regions here. These regions start to develop, and we've got more interest, more heat on the shorter side here. So it appears that we're still going to have a lot of very sharp selling here, selling interest. We still have a lot of very sharp selling interest. So this region is about 400 pips, which is much more practical. So we'll be looking at this more closely in the shorter term. As we keep zooming in, we can see that these regions are counted in days, and now we've got this. The price is actually in this region, which means it's very likely that it will touch this trend resistance. So that's about 40 pips away. This is not likely to happen soon. It's about 400 pips away, so that could be, we could watch this for the coming weeks. And this is really what we're going to be looking at here. Now we still have this decreasing slope here. This is like a 45-degree slope, decreasing slope. This doesn't serve as a good risk region, tradable risk region. But like I said yesterday, I anticipated the price continuing to slide down. It's possible that it would keep sliding down. It's also possible it keeps sliding down today, and you wouldn't have any risk region to counteract that, even though we have a very good reward region here. So you may want to, just like yesterday, you may want to take risks to try to hit this region, which would be, again, like the dollar cost averaging, euro dollar cost averaging, buying lower and lower prices until it hits this this trend resistance. And that's it for today. We'll get a closer look at this, and we'll see what happens tomorrow.